Okay, so let's take a look at a property management company. I want to give you a little bit of background on this company before we take a look at their internal control structure and our case study. But what a property management company does is assumes all of the responsibilities that the property owner would naturally have. So property management companies step in the shoes of the property owner, and they deal with all of the things that would be concerning the property. So they deal with things like qualifying tenants so that those properties can be rented. They actually collect the rents. They respond to everything that the leasee needs. So the person who is renting the property would be dealing with the property management company and not the owner. So the property management company is really doing everything related to the property. They're dealing with the tenants. They're collecting the rents. They're also responding to requests from the renters about maintenance issues or even repairs that might need to be made. And then at the end of the accounting period, usually that's a monthly period, they are turning around and making a report to the property owner that says, look, this is who we have in your property. We collected this amount of rent. We had these amount of expenses. And the difference between the two is what they would give back, of course, after they've deducted their portion that they make from managing the property. So they take a pretty large percentage, but after they deduct their percentage, then they would be remitting a check to the property owner for the difference between the rents collected, the other costs, plus their property management fee. So that's how a property management company in general works. But let's take a look at a specific company and how it's organized. So we've got some main key players, and I'd like to kind of talk through who these people are and what they're doing so that we can understand the roles of each of them. So at the very top, so the first person that we have here is the CEO or the president of the company. So this is the person who owns the company, and he's overseeing things from a very big picture standpoint. So obviously, it's going to be the business owner that has the most to lose and the most to gain if the company is doing really well, right? But the CEO is not really being involved in the day-to-day kinds of transactions. Rather, he's hired and given these other employees different responsibilities related to managing the property. So up underneath the owner, while he's kind of overseeing things from a big picture, there are property managers who are incentivized. So these are commission-based workers who have assigned properties that they're in charge of. So the property managers really are serving as account managers. Okay, so account managers. And what does that mean? That means that they are really, for each property that they manage, they are the go-between between the owner and the property management company. So they're their primary contact, and they are really officially responsible for what happens to the property. So while they may not be the ones that are actually doing the service or getting the lease signed, they are overseeing those properties for the owner of the property. And then they're responsible for everything that happens to it. So the property managers are assigned accounts for which they're completely responsible, and not all of the things that they're responsible for are really directly under their control. These are commissioned people, so based on how well they manage their properties, that directly relates to the amount that they're paid. So commissions tend to incentivize good things usually. Okay, so let's write that up. So these people are commissioned based on volume. And so essentially, when we think about the CEO, that's good for the CEO, right? Because he's paying these property managers, and the payment that he makes for them is directly related to how rich those property managers are making him as the owner. So that's kind of sounds like a good incentive program. So the other group of employees that we have are our front office and customer service staff. So these are really the main line of customer service people that are dealing with our renters. So we have two people working the front office, and they're both always there. They are both taking in rent payments. They are the first line of defense for questions. If a renter comes in and says, I'm having a problem with my apartment, or there's a plumbing problem that needs to be addressed, they are the ones that are receiving that complaint and then forwarding that up to the property manager to say, what do you want to do about this? So we've got two key people who really serve as the face of the company. And when we talk about the face of the company, we're talking about the face to the renters, right? So these are the primary people that the renters are going to be dealing with. Now, from a back office standpoint, we've got a couple of bookkeepers, and those bookkeepers are going to be doing different things, and so their responsibilities are separated. One of the bookkeepers is responsible for coordinating all of the service that needs to be performed on the properties. And so this bookkeeper has her own account, okay? And so it's a separate account that the bookkeeper has. She's dealing with a separate account. And once there is an approval from the account manager for any kind of service to be done, that's when this bookkeeper enters the equation, right? So that bookkeeper's coming in, okay, you need service done there. I'm going to do everything to coordinate and make that happen. So this person actually is dealing with all of the service providers. That might be a sub, or it might be just our general handyman that we have, and making sure that they know where they're supposed to go, scheduling them, and also taking care of paying them. And so all of the payments that would be paid to the service providers then would be handled by that bookkeeper. Now, the other bookkeeper is really the main bookkeeper. Now, why do I say that? The main bookkeeper, this person is handling all of the bookkeeping, should have two Ks, all of the bookkeeping needs for the entire business. So the coordination of service bookkeeper really is just handling those cash disbursements that have to do with service being done. The main bookkeeper is more big picture, so everything related to the business would fall under that umbrella. And the main bookkeeper has a primary account, the primary business account that's used, okay? So the coordination of service bookkeeper does not report to this main bookkeeper, but definitely the main bookkeeper would be the one in a position to know more about the company, all parts of the company. All right, so then we have a class of repair and maintenance staff. Now, some of those folks, and for this particular company, these were all guys that were repair and maintenance staff. So there were some general handymen that were on the payroll that could be brought in to just take care of little small things that needed to be fixed. But when there's special service issues that needed to be addressed, sometimes a subcontractor would be used. So plumbing would be a good example. Usually you don't want just anybody dealing with plumbing. You want to have a plumber dealing with plumbing, or you're going to create a lot more problems for yourself. So that staff of people is always called in on an as-needed basis to work on the properties. Okay, so let's talk about how all these personnel fit together in getting things done for the property management business. We have the property managers who are at the top of the organizational chart, and they're really the ones driving the activity. They're overseeing the activity related to these properties that they manage, and there's a team of people who are helping them get all of that work done. And the first group is the front office staff, right? Because the front office staff is the face of the business for the renters, and so they are the ones with the one-on-one personal contact with people who are renting properties. And so they're the ones getting the leases done and accepting all of the payments. And they're also providing some reporting back to the property manager to let them know what's happening, what rents have been collected, what rents are past due. Very important to the property manager. So our first bookkeeper, we know, that's the coordination of service bookkeeper who is in charge of making sure any service calls that need to be made on the properties are getting done. So they're organizing those happening. They're taking care of getting those service people paid for the work that they do. Also, they are keeping track of what properties the work has been done on so that that can be reported to the property manager. They need to know that as well. The regular bookkeeper, so our general business bookkeeper, that's the bookkeeper that's handling every other transaction. So this is the person who's paying all the bills. They are essentially holding the purse strings for the entire company. And then we have the CEO or president slash owner who is the one that's kind of sitting back and evaluating things as they happen. So this president would be getting financial reports that are coming from that general bookkeeper, and then also looking at bank statements and reviewing those to determine how the company is doing.